talk to us about just how low the bar has got and whether indeed third quarter does sort of hit that low, does mean we get better after that.
Yeah, so consensus expectation right now is for about 2.5% earnings growth. Obviously, what would be the trough of this earnings downturn that we're having. But the big question is, can it go lower? Like you were saying, a lot of investors are priced for it to go lower. There's a few factors that we think kind of keep it from going lower, though. The first is that our guidance model, which correlates guidance to actual EPS results and is kind of biased towards beats as the market is, suggests we could actually have 9% EPS growth. The second thing is that even though if we have an EPS fall, our fair value model based on September's low suggests that anywhere from 5 to 15% of EPS decline was priced in, which is pretty much in line with the pre-1990 recessionary average of the 12.6% drop. So possibly not as bad as everybody's thinking.
Not as bad here. And I mean, I know everyone's focused on EPS. Hey, talk to us a little bit here about some of the revenue forecasts as well. I know they've come down slightly here, but we're still expecting, at least in aggregate, I think, something like 8 or 9% revenue growth. Is that the case?
Yeah, exactly. That's around the absolute number that we're looking at. You're right. They have fallen about 100 basis points. The bigger thing, as Taylor was mentioning, is the earnings margins forecast. So margins have fallen about 60 basis points over the same time frame. So that's over the last 12 weeks. That 100 basis point quote for revenue is, and really kind of margins act as a multiplier, and you need those to collapse even more for earnings to even turn negative here off of that 2.5% expectation for this quarter.
How is technology in terms of leading or lagging on our way out of what could be a trough in some of those earnings revisions?
Yeah, so right now, tech is definitely contributing to that earnings trough. It's expected to have about a 7.5% downturn. The only worst sectors are communications and financials from a year-on-year EPS growth perspective. But the forecast right now from consensus is that tech is going to help kind of lead us out of this, along with discretionary and some of the more growthy sectors. So, we're really going to be watching the company outlooks to see if that forecast is what's materializing.
And I think it's about 6 industries you think will suffer some sort of earnings recession. When you're looking through the words that are going to come from the CEOs, the CFOs, when you're looking at the forward-looking picture, how much do you think today's angst is going to be blamed on the dollar?
Yeah, a lot of it. Last quarter, inflation mentions actually got surpassed by dollar mentions for the first time in quite a while. Same thing with supply chain, another kind of offshoot of inflation. If we kind of see the same picture materializing this quarter, it might actually be a hindrance to tech, in that tech is one of the most exposed to revenues outside of the US of the 11 gig sectors. So again, tech is kind of really the focal point here for this quarter.
When we sort of look through some of these sectors here, and I know tech remains that focal point, there was still, I guess, some strength, at least in the previous quarter, that Q2 earnings season, that we saw in energy and materials, I guess some of the more commodity-driven, if you will, sectors. Are those going to hold up in Q3?
Well, energy certainly is. Energy still forecast for over 100% EPS growth. In fact, if you were to back out energy, we'd already have that earnings recession that everybody's talking about if 3Q forecasts materialize as expected. Last quarter, obviously, taking out energy was a decline, and this quarter right now is expected for even more of a decline, with earnings flattening out in 4Q, excluding energy. So again, that kind of commodity complex is kind of key to the expansion that we're getting, and if that falters a little bit and it's not picked up by some of the other sectors, you could easily slip into slightly negative EPS growth territory from here.